All right, guys, back to work. Back to work. Hope you had a fantastic summertime weekend. Boy, these markets have been wild lately, haven't they? That's okay, though. Anytime we see big moves, we've seen the last couple of days here, big moves always give us some really easy winners the next couple of days. I have 3 trades I'm looking for tomorrow after the big move down that we saw today. We'll cover all the entries, the exits. By the time we're done tonight, you'll have an easy roadmap to make some money tomorrow as well. Before we jump in, though, it's my favorite trades for Tuesday morning. Make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button, will you? And give me a shout out, give me a hell yeah down in the comment section below. Thank you guys so much for tuning in, supporting our channel. Been a wild couple days. That's all right, though. These charts look beautiful going to Tuesday morning. Charts already, as you can see here. NASDAQ triple Qs are all ready. The E-mini and the SPY is ready. I have 2 very important clues here on the charts in front of us that are telling us where the winning trades are waiting for tomorrow. One of those clues is right here on these 60-minute hourly time frames. Big clue. Range on the S&P, breakdown. Range on the NASDAQ, breakdown. Ranges love to break out and pull back. Ranges love to break out and pull back. So I would expect there to be a bit of a rally going higher, but I wouldn't confuse that, not just yet, for a bullish reversal. Expect bears to be up here waiting to short this thing at a much higher price with that breakout pullback. So we're bearish overall. There's no doubt about that. But again, I would expect a little bit of a pullback here for that breakout pullback going lower. That's one really big, kind of bigger picture clue here on the hourly time frames. But here's the problem though. These hourly charts, these 60-minute time frames, they're great for the big picture, but they're not going to help me time the entry for tomorrow. To do that, we need faster time frames, tick charts, and we'll talk about that entry tactics and timing the entries here in a moment. Before we do that though, let's check schedule for tomorrow, because tomorrow we have a pretty much wide open week ahead of us. Kind of your classic second week of the month. There really isn't a lot of major news all week, so I'll be listening closely from FOMC speakers, Fed speakers. Maybe we get a surprise rate cut sometime this week here. We'll see. But no major news here on the calendar. On a side note, there'll be no video on Wednesday night. We'll come back tomorrow night, though. Don't you worry. But no video on Wednesday night. I'll be out of the office on Wednesday afternoon. So not a lot on the calendar, at least that we know about right now. But I'll keep you guys posted if I hear anything that pops up tomorrow morning in our trade room. Now back to our charts, though, because it's good to know when there is or isn't news for tomorrow. Pretty much a wide open session. Let's get back to our charts though, because the money is made on the charts. We talked about how we're bearish overall. It's a range market on the 60-minute, that breakdown and that breakout pullback. So let's now go one step further, drill down to some faster time frames, some tick charts. Tick charts, I think, make entry timing much easier because they're better for pattern recognition. And by the way, this is a 10,000 tick chart. All the time frames there in the upper left-hand corner. I did bump this time frame up a bit because the volume was so significant on the chart right now. So 10,000 tick chart, upper left-hand corner, and that yellow line right there is pretty much the only indicator I use to find winning trades each week is the 21 EMA. Now, there is one very important clue here on the chart in front of us, and that is a bullish move up into a trading range. Now, why is this important? Well, because 2 things. Ranges act like magnets, and ranges love to rotate. They rode up, down, back and forth. So if you think about how ranges work and think about that 60-minute chart we mentioned earlier, I'll bet there are a lot of sellers that would love to scoop up some of those range rotations, some fake out breakouts. When I look at ranges like this, the key for tomorrow probably is fake out breakout, right? Fake out breakout. Get that run up and simply look for some bull traps and reversals back down into that trading range. I also have some buys down here too. Later on in the video tonight, we'll talk about if we wind up all the way back to that low, I'll bet there are some great bear traps as nobody wants to sell low down there. But first though, let's talk about the going higher here, because obviously if we go higher here and rotate off this low right now, we've got all that key area of resistance overhead. We saw that earlier on the 60-minute time frame. But as we go higher here, it's going to be a lot of bullish momentum in the short term. I know we're very bearish overall right now, but we have to respect that short-term bullishness. So because of that, I can't simply just short the top up here. I can't simply sell right into, even though I have a lot of resistance, we call these pendulum swings up here, a lot of resistance levels up overhead. What I'll do is if we end up going higher here overnight, I would love to use basically a bull trap. Now, there are two types of bull trap patterns I look for in these kind of range breakouts or fake out breakouts. Two types of bull trap patterns I'm looking for. One is a kind of a classic kind of technical bull trap. It's buyers pulling back, trying once, going lower, trying twice. Now remember, lot of bullish momentum, so we'll have to respect that momentum, trap these buyers in. Let them try once, let them try twice. And one thing I've learned is the easiest money you can make is when you're selling into the stops of those buyers. So I'm not going to pick the top on this, right? For all I know, it'll keep on going. And if it does, we'll cross that bridge tomorrow morning in our trade room. But if I start seeing this thing pull back right now, right, and buyers come in, try once, buyers try twice, I would love to get a bull trap pattern, just like I teach in the free video course. Nice strong red candle closing below that 21 EMA. And again, think about that market rotating back and forth. Targets, of course, on this are back into that range, taking out some support levels below. And then later on in the video tonight, we'll talk about how to buy that thing back up again. So I think there might be a lot of buy setups down there as nobody wants to sell low after a big move down here. That's one type of bull trap pattern, a kind of a technical bull trap, just like I teach in the free video course. Now, a second bull trap pattern is more like a V-top. You know, sometimes we'll run all the way up and there's so many bears up here, it just gets whacked right back down again. We don't get the chance to 1, 2, and trap those bulls in with a technical bull trap. If we run up and get whacked back down again, the key will be not to chase it lower and to sell as high as we possibly can. And to do that, watch closely. I'm going to draw a trend line off these lows. I'm going to bring that trend line up around that big high. And then as always, we're going to look left, find some prior swings, and the goal is I want to find a prior swing high that lines up right around with the high of that channel. This is usually where the best bull trap entries live. Oftentimes these bull trap entries turn into failure patterns, of course, above the moving average, failure patterns into pullback combinations. And again, remember that range below us is a magnet. Expect this thing to want to rotate back and forth. So a second variation of a bull trap really is simply a V-top where we run up and get cracked back down again. It grinds down like that. The grinder is the giveaway. And when that happens, I want that first test, right? The first test off the high of that channel. It's a bull trap. It's a buyer failure. It's a pullback combination, just like I teach in our free video classes. Now, keep in mind too, a lot of times when I get these big runs up like this, we're going to get a 1, 2, we're going to get a bull trap entry going lower, but you know, ranges, they love to break out pullback, right? They love to break out pullback. So a good spot for a target on these is the top of that trading range. If we wind up, you know, oftentimes what happens is we'll wind up getting up here. We'll get the winning trade off the high. We'll get that nice bull trap off that high. We'll take our profit at the top of that trading range. But because this move was so bullish in the short term, again, all that momentum is tough to stop sometimes. And the market will now run right back up and do it again. Now, this is not a bullish reversal. They have to keep it going by quite a big margin. This is usually a gift from the trading gods and another bite at the apple. Now watch closely. This is very, very important. I need a bull trap pattern when I sell into a very strong momentum move like that. But if I go back to retest the high, anybody who bought that breakout pullback, they're taking their profit now at that high. Buyers down here become sellers up here. I can be a lot more aggressive on the entry on a double top retest. Now, what I mean by that is I don't need a classic bull trap pattern. All I need to use now is a classic failure pattern. Same idea, right? Buyers once, buyers twice, but now because this is a double top on this, I'd be a lot more aggressive on it. Once those buyers are in, I now can use their stops with a failure pattern to sell back down. If you're in my free video classes right now, it's a bull trap pattern. On the first move up, it's a double top into a buyer failure pattern. The second pattern here is a lot more aggressive because you're buying as it goes lower, not as it goes higher. Now, speaking of bull traps, a lot of times what happens is we get that buyer failure, we roll over, then we get that bull trap pattern, that lower low in price, going lower from there, right? So classic bull trap pattern, buyer failure if they go back and retest. And then again, a technical bull trap, it's that lower low in price, that trap above that high, and again, let that thing roll back down into that trading range. Okay, so let's slow down for a second now because we've covered a lot so far in this video. I know that most of you guys and gals watching right now, you know these patterns, right? You're making money with these already on your own. But if you're here for the first time right now, this might be a brand new language for you. What are bull traps? What are failures? How do you know when to use each one? Don't you worry. I teach the entire strategy. I have hundreds of examples of all these entry patterns included in our free video classes. I'll put a link up top for you. Don't you worry. Upper right-hand corner, grab that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room so we always know where the best winning trades are going to be each day. More importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, failures, traps, strength trades, pullback combinations. Guys, if you're missing the best trades right now, if you're struggling to qualify for a funded account at Apex or TopStep, hit the link up top there, take that free course. It is perfect for anyone who is serious about making money in this market. Again, it'll give you an easy roadmap so you always know where the winning trades are waiting for each day. Also be aware too, I'm going to put all the important links tonight in the description of the YouTube video. I'll put the free class links down there. Definitely start first on the free video course, learn the roadmap, start making money with that stuff on your own. We trade together every day in our trade room, 8 o'clock Eastern time. You'll love the trade room. I'll put membership links, description of the YouTube video. And don't forget too, I post a lot of updates on Twitter or X throughout the day, videos, charts, mindset stuff. If you're on Twitter, X, give me a follow. Again, all the details, description of that YouTube video. But again, start first on the free video course, learn the basic strategy. That way, as we go higher, you'll know how to time the best entry with a bull trap or a V top or that double bottom retest as we go higher. Now let's talk about if we go up and wind up all the way back over again, right? Well, first of all, can I sell down here? Or can I buy down here? Might not be an easy spot. This spot right here is a very tricky area because we're already very low on the chart. But then again, a lot of momentum now for the bears here. Let's go to the NASDAQ now. S&P looks good, and keep in mind, the NASDAQ and the S&P are almost identical here today with that 60-minute time frame. You'll notice here on the NASDAQ, right? There is my trading range. There is my big breakout, and of course, that breakout pullback, right? We expect this thing to want to pull back right now and breakout pullback off the underbelly, if you will, of that trading range. Knowing that now, let's go back to our tick charts. This is a 4,000 tick chart. Once again, all time frames, upper left-hand corner there. And once again, you'll notice the same basic clue here. Bull move up into a trading range. Ranges love to rotate back and forth. We'd love to go up, trap in some buyers with a classic bull trap, maybe a V-top reversal and short that first test off the high of that channel. And if we're lucky, we'll go up, trap them in, roll lower, do it again, and hit that double top reversal for tomorrow. Now let's talk about, though, if we wind up running back down to those lows here. If we run back down to those lows, we're going to be very bearish, right? It'll be very bearish overall. But the problem is I don't really want to sell into such a big move overall. Again, we've made a very big move down the last few days here, right? So as we go lower, this becomes a very difficult spot to justify being a seller. So here are 2 scenarios I'm looking for tomorrow if we wind up now around those lows here. If we come crashing back down again, all of that bear momentum is going to want to pull back and retest that low. Look over here. Anytime we see a strong move, we pull back and then want to retest that low. So if we understand that we're very low down here to sell, also very bearish though to be a buyer, what I want to do is look for this sequence. I'd like to trap in the sellers down here with a basic bear trap pattern. A basic bear trap that is 1 try for the bears, that is 2 try for the bears. Remember, higher high in price. Why higher high? Because sellers want to sell high. Let them sell twice. Then I want that nice, strong, in this case, green candle closing above that moving average. And that is your classic, your typical bear trap pattern right there. Now, a word of caution on this. This is going against the overall direction on the 60-minute time frame. So in my point of view, in my opinion, this is a half size position. It's a quarter size position. I'm not going to use a full size, right? If I trade 8 contracts normally, this would be a 4 contract trade, right? Cut your normal size in half. That's my game plan on these reversal trades off of that low. Now, at this point now, once we get that bear trap, one of 2 things will happen. We'll either squeeze and run back up into that range again, because again, ranges love to rotate, right? We'll cover that in a second. But also to remember, ranges love to break out pullback. The underbelly of this range becomes a fantastic target now for the long trade, right? That bear trap off that low. And this is where we wait and see what happens. Very, very important. Remember, we don't pick tops and bottoms. We wait for good signals. If I start seeing this thing, if this makes a strong run down, that strong run down is going to want to retest that low. Let's go in now and trap some buyers in. 1 try for the bulls, 2 try for the bulls. This buyer failure pattern, not to blindly sell it, but trap those buyers in and use their stop losses as always to run back down to retest the low. If I can get that retest of that low, I'll do it again. Right? Let them pull back. Bears once, bears twice. Now remember, I need a technical bear trap at these lows. I'm not going to buy off that low unless it's a good setup because we're overall bearish, right? So higher high in price. Think about that sequence, right? We run lower. This is a horrible spot to be a seller. We're right near those big lows after a big move down that we saw today. I think that's too low to be a seller down there. I can't buy it though because we're so bearish overall. So instead, we trap the bears in, use their stops, right, to fuel that run going higher. Use that 1-to-1 target technique I use in the free video course. That'll give you the first target. Think about the underbelly of that trading range. We then wait and see what happens right there. If these buyers come in, they struggle once, twice, we know it's a breakout pullback off that range. That's a buyer failure pattern back down to retest that low. And once we do retest that low, anybody who sold up here, they become buyers taking profit at that low. Do it again. 1 try, 2 try. Again, a double bottom retest is oftentimes the most lucrative trade you're going to get each week. Remember that higher high? Always a higher high here. 1 try for the bears, 2 try for the bears. Squeeze those stops, right? Run those stops and run that thing back up again. I like the idea of that bear trap, double bottom bear trap, back in that range here. One thing you want to keep in mind though, here, we may get that run up, that run lower. We might get a beautiful bear trap off of that low. And we may wind up here now really punching and going higher. So if it pulls back and begins 1 try, 2 try, that's a failure pattern, right? Back down to retest the low. However, if they run up and we start grinding away from that moving average, remember how ranges work. Ranges like to rotate. We go up, down, right? So the giveaway on this is if we can get a bounce off that low, bear trap pattern or crown reversal pattern, we call these in our trade room. If I can get that bear trap pattern to buy off of that low and we start popping up and grinding away from that moving average, that is a very good sign. We're going to wind up all the way back up to the other side of that trading range, again, because ranges like to rotate. Now remember, if I see a V bottom, right, a V bottom off that low, or I start grinding higher, always draw that trend line off those highs, bring that channel around that low that we look for. Find those prior swings, right? And this is where the money is usually waiting for us after a V bottom or anytime we see the market pop up and start grinding higher away from that moving average, right? Now, again, this could be a bear trap pattern. Let me show you right here. A lot of times we get bear traps, we get underneath the moving average. That turns into a failure pattern. Again, we teach all this in the free video course, failure patterns into pullback patterns. And again, the amount below the range, the amount above the range, that is where we now look to put our final targets on the side of that range rotation, right, guys? So that may be something we have to kind of adjust to tomorrow morning if it starts to develop and kind of grind higher. And remember, it may run lower and bounce right back up again, right? Kind of buoying off that low here and then begin to grind. It's that same idea, right? Same idea. It's that range rotation, that range, right? And that range rotation. Okay, so just be aware of that. If it bounces hard off of that low, keep on looking left, keep finding those prior swings, and don't miss the first test off the low of that trading range. So again, make sure you remember that, right? If we go up and come crashing back down here, it's that bear trap to buy the low. It's that pop up. Respect the underbelly of that range. Trap those bulls in. Expect a strong run going lower. We'll want to retest that low. To do that, of course, we don't pick that top. We trap in those buyers trying to go higher here. Bear market overall, bull trap, or a buyer failure pattern, which is what I would call in this one a failure back down to retest the low. And again, we'll look for that bear trap off that low and potentially back up into that range we go. The big clue here is that big move down. We doubt, unless something big happens next 24 hours, I would imagine as we go back to these lows, there won't be a lot of big money bears waiting down there. This is a great spot to pick those bottoms and sort of rotate back up into that trading range. Right, guys? That's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade the stuff with us. The markets are wild right now, but I'll tell you, the easiest way to start making consistent money in these markets is to learn and trade along every morning in our trade room. I'm going to put, as always, all the links you need in the description of the YouTube video. If you're here for the first time tonight, welcome. Start first in the free video classes, learn the roadmap, start making money on your own. And as always, any questions, comments, concerns, any issues getting started, use live chat. You can always call the office, send me an email, or drop questions in the comment section below as well. All right, guys, hope you learned a bunch in tonight's video. Hope you use this knowledge to earn a bunch tomorrow morning. As always, hopefully I'll see you sometime soon trading with us in the morning room as a brand new advanced member. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye for now.